The other day I got a late tollway fine. It was twice late because I hadn't got an alert from Australian Post, which is where my PO box was, which is where the tolls have been sent to. At that moment, I got this feeling that has been recurring a little bit of late, which is all these extra costs which just keep piling up, and they come from here, there and everywhere. Because the fine was late, it cost me double the amount. It wasn't connected to my credit card because Vic Roads got my address wrong 2 years in a row, which meant additional costs such as roadworthies. I got one fine of driving around an unregistered car for about $950. And then when I went to contest that, because Vic Roads clearly got my address wrong, that contest got denied. So just paid it in the end because it's not worth my time to muck around and try and get it repealed. I switched from being really angry about paying all this extra money to just a state of apathy and just to pay up and shut up. My experience is just one example of what the average person has been facing in terms of, let's call it, hidden taxes. Every time you go to buy something, it's a surprise because, let's face it, everything has gone up faster than what your income has. Today we're going to talk about something you can do to recoup all those extra hidden taxes you're paying. Let's talk about offset accounts. Why should you listen to me? My name is Will Bell. I've been running my mortgage brokerage here in Melbourne for the last 13 years. My purpose is to help people make it financially, and one of the best ways I can do that is to help people get rid of their debt ASAP. What is an offset account? How do they work? How can they save me money? I'm going to show you how offset accounts can help you get ahead. What a lot of people don't know is that some lenders offer multiple offset accounts, which can be another added advantage to borrowers, which I'll explain a bit later in the video. What is an offset account? An offset account is like a regular savings or transaction account, but it's linked directly to your home loan. The money you keep in this account reduces the balance of your loan that's used to calculate the interest. For example, if your home loan balance is $400,000 but you've got $50,000 in your offset account, you'll only be charged interest on $350,000. Here's the thing, your loan repayment doesn't change. So if you're paying less interest because of the offset account, but you're still paying the same repayment, it means you're actually just paying more off the loan itself. Let's use this example. Let's use a current interest rate of 6.04% and a 30-year loan term, and say you've got 50 grand in the offset account. You can see here that the loan will be repaid 6 years and 6 months early, saving you $186,393 in interest. Just putting in one simple thing like this can be the difference between retiring when you're old and broken in your 70s, or with a bit left in the tank in your 60s or even your 50s if you're lucky. But wait, there's more. Most borrowers can afford to pay more than the minimum, or in other words, you can increase the amount of money in your offset account every time you get paid, which increases your savings even more. Despite the tough times and the cost of living crisis, most borrowers have capacity to do this on some level. Even an extra $10 a week can make a difference. A little bit goes a long way here. Using strategies like an offset account can help you get out of debt a lot faster and make a major difference to your financial future. I help people put these sorts of strategies in place to pay out your home loan faster all the time. If you want help with this, I'm putting together a debt repayment program to help people like you pay off their home loan sooner. You can find my details in the links below if you need help with this. I started finance in 2007, and one question I got asked a lot and still get asked a lot is, what is the best way to set up our accounts? What was noticeable very early on was that everybody sets their accounts up in different ways, and most people have more than one account. Here's a few different ways people have more than one account. They're a couple and they run separate bank accounts. They have a barefoot investor style setup where they have different accounts for different things like utilities. They might have a splurge account, a separate savings account, all that sort of stuff. They might have accounts for their kids. There's just a few examples. The thing is, you could be unknowingly pouring money into the bank's pockets. I'll give you an example of clients of mine who had a separate bank account for where they'd save money for when their kids become adults. They had a loan amount owing of $330,000 at an interest rate of 6.14%. And they had about $20,000 sitting as their kids' savings account with about 23 years remaining on their loan. We restructured their loans to include multiple offsets so they could still have their kids' money in a separate account, but is now offsetting the loan. You can see here there's a significant amount of savings. If you compare that to money sitting in a savings account, getting some interest, then getting taxed, it would struggle to keep up with inflation. If multiple offset accounts is a path you want to look more into, then the team here at Will Bell Mortgage Broker will be more than happy to help.